is the 1 month a year where silver and gold futures expiries happen at the same time, and it is the largest quote unquote delivery month of the year.
Wow, we are absolutely living in historical times here, and another reason why you just can't afford to miss another episode or any episode of Live from the Vault here, Andrew. Now, you already brought up Basel III, but before we were started recording here, you mentioned something that Basel III is changing the game. You were talking about that. Can you maybe talk to our viewers about what you were commenting on there before the call?
Yes, absolutely, Shane. And this is where we should take heart. Step back from the deliberately rigged chart chatter. I mean, look at it, CPI today. I mean, it's a joke. I mean, it's algos chasing the specs around. But this is indeed where Basel III is changing the game. And the clue is how the BIS is moving to exit its lease and swap positions. I have much more direct evidence on this as soon as I'm allowed, but it leads me to at least estimate and assess what likely by the end of the third quarter, the BIS will benefit from a higher gold price through to the fourth quarter, which I say, as I just said, includes December BIS options expiry. December is the 1 month a year where silver and gold futures expiries happen at the same time, and it is the largest quote unquote delivery month of the year. Single, and that is usually where the whole year's options positions are reset. This is an interesting situation. So very short term, we're recording this on Wednesday the 10th of August. The option structures following this dubious non-farm payrolls number, you only have to dig under the headline number to see, hang on, this isn't as bullish as it seemed. And of course we had CPI data just a little while ago. Once they've had a chance to fully settle, and they haven't had a chance to fully settle yet, but the specs who sold calls at 1800 look increasingly vulnerable, and the immediate BIS sweet spot is around 1820, but we actually anticipate this to be forced to rise this month. Now, and of course this reflects where the positioning is of the banks and their whale customers. Now, I think this is going to rise. In silver futures, the spec calls sold at 20 are looking extremely fragile. Then each time you've sold if you sold a call, in other words, you're saying anything above 20, I lose money, and because I don't think it'll go above 20. Huge mistake, because what they're saying is, as soon as it goes above that, they're forced to delta hedge, which means to buy futures to offset their losses. And they have to do it on every breach. And these bets extend all the way up to $25. So once again, as soon as this algo-driven CPI settles, we likely see insiders continuing to pull the trigger. Now we're watching this closely as silver is coiled for a very large COT-driven short covering move. In other words, officially driven short covering move. The house is ready to move. Now there's little doubt in my mind that the official gold price suppression game has now been exposed by the court discovery process. And with physical exchanges now becoming more liquid every single day, the only question to pose to everyone is, how much physical gold and silver do you own?